What's up, everyone? It's Kadi with MoneyVest. So wanted to do a full detailed analysis on big tech and Magnificent 7 companies, and also go over some very important technical levels that you can watch and look out for. These are tradable levels that are very, very important to keep a close eye on if you are looking to, let's say, trade or invest in these Magnificent 7 companies. So I'm going to break this down in my spreadsheet. I'm also going to very specifically break down, okay, which companies and stocks offer the best risk reward versus which ones we need to kind of be aware of that the risk reward is not that favorable, so that you can actually plan out your trades. Again, if you enjoy these types of videos, make sure that you drop a like. I would really appreciate that. Subscribe to the channel and let me know in the comment section down below what other groups of stocks you want a very similar analysis on. So if you want, technical and fundamental analysis just like these on specific sectors, I've already been doing that on semiconductors, cybersecurity, on big tech, Magnificent 7. If you want renewable energy, or if you want something related to defense or retail, let me know and I will make sure that I do specific kind of aggregated sector only videos where we break down the technicals and the fundamentals of these companies. So again, links to our Discord and Patreon is going to be down below. There is a 16% annual discount available until the end of this month, and we'd love to have you on board with a few more spots that are left at the moment. So this right here is where we are with the Magnificent 7 companies here. So Apple, Google, Amazon, Microsoft, Meta, Nvidia, and Tesla. And what I have over here is the near support levels to keep in mind for these companies, along with very, very important areas of demand. Areas of demand are very different than support levels, because support levels can just be a level that was, let's say, a previous resistance, or a level that we kind of bounced off of more recently. But the demand is a very, very strong area of demand, meaning that it is where we have seen some very strong buyers step in. There was an area of reversal for the stock at these prices. So that is, again, going to be very important levels to keep in mind if you are looking to, let's say, even invest long term. That's why they are going to be significantly lower than where the actual support and resistance is. Actually, Apple needs to be updated a little bit, so let me just quickly do that. Apple resistance, we've already got up to as much as 195 with a support at 175. So 175 support, 199 or 198 roughly. And a much stronger area of demand was sitting in tier 2 at 150. So that right there is going to be the level. So, okay, so if we start with Apple, and I've got the weekly RSI over here as well. And as you can already starting to see that this is how I kind of formulate my trade ideas in general as well. So we had 2 trade ideas from last weekend. I shared this in the newsletter. Apple and Google were 2 of them. Google worked out really well for us because it kind of rallied this past week. Google was up, I think, over 16%. So this is up over 4% this week. The week before that, it was up another 4%. So from our levels from back in 130s, Google went up over 14%. So very nice, move back higher, got up to as much as 152. I specifically sent out an alert in our Discord to lock in profits for anybody who took the trade, because we are already getting up to that resistance. And of course, from those levels, we are back down in the 140s. So Google worked out really well. And Apple here was also part of that trade idea, which I think still has a lot of potential, considering that it hasn't really started to move as of yet, but it is moving, right? So it is up a little bit over 1.5% today. This still is valid, and the target and resistance is still back up to 195. So that is really where we are. And again, very, very oversold RSI, very oversold MACD. I mean, we haven't really dipped below the 22, 23 level on the RSI in such a long time. I mean, this was the first time that we saw that since 2019, right? So this made a lot of sense from a technical analysis standpoint, given how favorable and good the risk reward was and how oversold we were. Even on a weekly time frame, you can see how oversold we were. Like, we still are, right? RSI is at 45. So we're starting to now move back higher, with the MACD also looking pretty attractive here at these levels, considering that we were oversold. And if you do get that crossover back over the signal line, there is potential for Apple to also see that upside of another maybe 10 to 11%. So those 2 trade ideas are still valid. And the third one, which I think has a lot of potential, of course, is Tesla. Tesla, we discussed, I've done several videos on Tesla. It's been struggling momentum wise, technically speaking, even from a company specific standpoint, with the price cuts and the margin compression. There's a lot of fear and panic selling happening around Tesla, where there's a lot of exhaustion to the downside. So very strong support in the 150s, right? We haven't really touched 150s yet, but we were trading in the 160s just a few days ago. Like last week, we came down to as low as 160s. And of course, this week we're up over 4.7, 4.8%. Yesterday, I think Tesla had a phenomenal day. Right now, pushing higher. a little bit, but it is again very, very oversold, and it's got that potential to maybe trade back higher given how much it's been selling off. So we do have some resistance up to $175 to $200, some of the more initial targets, back up to as much as $240. That's going to be kind of aligned with this lower high. So that's right there is going to be that lower high for Tesla, which we will eventually analyze and get to if, of course, Tesla trades back above that level. But this is the overall downtrending channel of lower highs and lower lows. So, and again, much stronger demand in the 100s. So as we already know, low 100s is where Tesla rebounded very aggressively from those levels. So that's where a lot of the buyers are sitting in, and they're going to be stepping in at those prices, kind of ready to pounce on those opportunities on Tesla. So very strong demand at 101. Now, apart from Apple, Google, and Tesla, I can't confidently say any stock among the big tech or Magnificent Seven that looks appealing from a tradable standpoint, from a risk-reward standpoint. Still a little bit more on the reasonable side would be considered Microsoft, but even Microsoft is trading pretty much at an all-time high. And it's rallied quite a bit. I mean, it recently had a breakout to new all-time highs, and 418 is going to be that resistance because it's pulled back from those levels, and support level is going to stay put sub 400 with the demand area sitting roughly in the low 300s. I did a fair value calculation. My fair value ended up in the low 300s. So this right here would be a very, very attractive price for Microsoft, not only from a tradable perspective, but also from a long-term perspective on Microsoft. And then, of course, nothing else that comes to mind from a favorable risk-reward ratio. Nonetheless, but there are still opportunities to look at if, of course, we get down to those demand areas. Amazon, 70 weekly RSI. It's overbought. Meta here, 78. Very overbought. And then Nvidia, don't even get me started, 90 weekly RSI. So look, I'm not saying that these are not companies worth investing in long term. Absolutely not. This is simply a weekly RSI reading. Just shows us the technical overextension to the upside for these individual stocks. Does not make them bad companies by any means. Just want to be very clear that these companies are still the best of the best, and they are quite literally changing the way we interact, we communicate, and we are living our lives, right? These are the companies that control most of technology, most of what we do. Most of our time is spent on doing things that we're doing. So like quite literally, I'm using a MacBook right now, Apple product, using Microsoft Excel, Microsoft product, and basically, producing this video and posting it on YouTube, which is Google, right? So I'm literally doing right now everything that these companies in some shape or form own and sell their services. So quite literally, these are some of the best, but I'm giving you the best prices where I would personally be looking at accumulating more shares, buying more aggressively, and support and resistance levels where they become the most best risk-reward wise tradable opportunities. So right now, I think Google's kind of run its course. I would put it under the not to trade on the upside sort of bucket. Apple still has potential. So Apple is the one that I would be looking at, paying a lot of attention to. And of course, Tesla. Very oversold, but Tesla is a little bit more cyclical, more volatile. Has a lot to do with what Elon Musk is tweeting and what the company is doing, as opposed to Apple, which does not move as much on the news, but more on the momentum and the price action itself. So Tesla can be a little bit more volatile, but definitely selling puts can be an option here. And other than that, I think these can be very good sort of candidates for selling calls against those shares. If you are looking at, let's say, out of the money calls where you are not, too concerned about letting your shares go, maybe a little bit, you're kind of lighting up on the position and de-risking, raising some cash. Those could be potential opportunities to sell some calls on, because I can't even imagine what Nvidia calls are selling for, let's say 1,050 or 1,100 calls, what premiums they are paying. Like those premiums are going to be absolutely insane for Nvidia. Again, support level is going to stay put at 845 roughly. Recent support down to as low as 858. We got a huge reversal from that prices. That's where the buyer stepped in after the earnings. And resistance is going to stay put at 944, 945. Microsoft also, same thing, lots of consolidation, got a huge breakout. Support level is going to stay put at 397, close to 400, down to as low as 364 for Microsoft. And then finally, we've got Meta, and the last one was Amazon. So Meta here, support level is going to stay put at 476, down to 454. Again, resistance up to as much as 500. And then finally, we got Meta Platforms, actually Amazon. So Amazon here also just consolidating sideways with the resistance up to 178, 179. Lots of consolidation with the support at 159, and of course, much stronger area of demand where lots of buyers are present. Even I'm going to be going crazy on Microsoft at those prices. It's going to be a 100s, low 100s. I don't know if we're going to see those levels, but if it ever comes down to that price, I will be loading the boat. So hope you all enjoy this video, and again, let me know in the comment section below if you like these types of videos, kind of sharing the technicals, the support, the demand areas, the RSI readings, the best tradable stocks, investable opportunities in the market. Hope you all enjoyed it, found it helpful. Make sure that you drop a like and subscribe to the channel. I would really appreciate that. And again, a few more spots left with that 16% annual discount. Link's going to be down below. As always, happy investing, and I'll see you all in the next video.